Hello and welcome to the Energy Talk podcast where we tell stories about sub-Saharan Africa's energy transition. My name is Olubumi Olajide and I am so excited to be back with another episode on the podcast. Our guest today is Emily McAteer, CEO and co-founder of Odyssey Energy Solutions. Odyssey has quietly become one of the most important startups in the climate tech ecosystem for emerging markets, with operations in multiple countries in Africa and also India, Mexico, and Brazil. Odyssey started off helping DFIs like the World Bank manage their financing programs for distributed renewable energy (DRE) assets, and has grown much larger to involve asset monitoring, equipment procurement, and directly financing DRE assets. Odyssey has raised 2 rounds so far, a $5.3 million seed round in 2022 and a $15 million Series A round in 2023 led by Union Square Ventures. Other VCs that participated included 12 Below, My Climate Journey, Equator, Equal Ventures, and many more. While we did not get an exclusive in this episode regarding future rounds, we can infer from the growth and ambitions that it should be around the corner, maybe in the next few months or in the coming year. Now let's get into the episode with Emily, telling us about how she first got into the energy sector.
Fun fact about me is that both of my parents worked in energy. So my mother worked for 35 years at the Environmental Protection Agency of the US government, and my father worked in the Energy Efficiency Department of a major utility here in the US. So I grew up sitting around the kitchen table talking about electricity grids and energy efficiency and climate long before I had any real career. And I actually, when I went to college, when you're doing your college applications, you check a box around like, what do you think you'll major in? And I checked off environmental studies, and that's exactly what I ended up doing in college, and then have had a career focused on climate and energy since sort of my very first job out of undergrad.
Wow, that's incredible. And I think it's very good you had that like early nudge in the space, but that doesn't still explain how the push for developing countries and underserved markets, or emerging markets rather. So was that something that was very obvious in the early stage of your career that you wanted to do something outside of the global north, or did that just happen organically?
Yeah, so that came when I was about 25 years old. My first job out of undergrad was not focused on emerging markets. I was working for a firm on Wall Street evaluating the impact of climate change legislation in the US on institutional investors' portfolios. This was back when we thought climate change policy was imminent, and there were some bills in the House and Senate around cap and trade in the US. So I was living in New York. I was working on US climate policy, and sort of on a whim, I attended a lecture at Columbia University that was featuring Dr. Pachauri, who at the time was the head of the IPCC and was the head of the Energy and Resources Institute in India. And he was talking about a new campaign that he had started in India called Lighting a Billion Lives, which was about introducing solar, off-grid solar and distributed solar to very rural communities in India that didn't have access to power. And going to that lecture sort of it all clicked for me. I realized that, 100% of the greenhouse gas emissions growth is projected to occur in emerging markets. And as these economies develop, electricity demand is only going to increase. So we really have to figure out how to put these economies on a low carbon development path if we are to solve global climate change challenges. And so I sort of caught the bug from there. I decided I wanted to move to India. I applied for a Fulbright. Was lucky to receive it. I moved to Delhi, and then I spent the next year or so living in Delhi, but traveling all over the country to remote areas and working with companies that were distributing. At the time, it was just small solar lights. This was even before the days of solar home systems. And that's where I first got my exposure to what an important role solar had to play in electrification of unelectrified parts of these countries. And I've been doing the same thing since. So
That's pretty incredible. It's the first time I've heard that story. But one story I have heard, and we can jump into the origins of Odyssey now. So I've heard many, many versions of the story, but one that has really stuck with me is that Odyssey started and you landed the World Bank as your very first client, and it was like super straightforward, super easy, and it was just a rocket ship since then. So Is that reflective? Is that as straightforward as it's been? Or can you tell us a bit more about the early days starting off Odyssey and looking to grow it as it has so far?
I'm literally trying not to laugh out loud when I hear the word straightforward and easy described any part of Odyssey's journey. um, so maybe to back up a little bit, I started thinking about the idea for Odyssey after being a microgrid developer myself. I launched SunEdison Frontier Power, which was a subsidiary of SunEdison to build microgrids and mini grids in India and Africa. And the challenge of financing the large portfolio of microgrids that we were building was just immense. And it really became clear to us that there had to be a different paradigm for how these small distributed energy systems were financed. That sort of standard project finance structures that were applied to large projects just weren't going to work for the sector. And that's where the idea of Odyssey was born, was how can we standardize, how can we use technology to make the financing process easier for the EPCs and installers and developers that are all needing to attract finance to get these projects off the ground. We had originally envisioned a more of a marketplace model whereby, companies would post projects and a host of financiers would review those projects and, determine if they were suitable for the financing. That model didn't work. Sort of became clear pretty quickly that you need to anchor one side of the marketplace. And that anchor came pretty quickly with, as you mentioned, our first contract, which was with the World Bank SMAP team that was just launching the Nigerian electrification project, the first version of it in Nigeria. They were thinking about how do we, I think it was a 350 million or maybe even up to $500 million program, but how do we disperse so much capital into so many different projects and keep track of every single project that got financing from us? And the technology that we had built for the original sort of marketplace version of Odyssey was actually quite suitable for this. And so we worked with them to kind of repurpose what we built a ton new features. That was probably the least straightforward part was learning over time sort of how do you run a results-based financing facility and how do you build technology that'll help you run it more efficiently. So we've sort of co-developed the platform over many years together, and then have been fortunate enough to be able to reuse a lot of this learning in new engagements in other countries as we've expanded beyond Nigeria over the years.
Yeah, and that is very fascinating because I think it also goes to something at the core of Odyssey, as you mentioned, the core marketplace model that you started off with, and evolving along the way. Odyssey has always tried to kind of meet the customers where they are with the way the product has gone. But before we get into that, just take a few steps backwards. So back to the straightforward and easy comment. I know that getting that first World Bank contract wasn't like solving all the problems. So what about the other factors that were playing at the time? Getting the company sorted out, raising the initial capital, obviously being one of, I think, there's a small minority of female CEOs generally in climate tech, very few as well that are operating in the global south as well. So how did all these things play out in the early stages?
I like to think of Odyssey as sort of having two distinct phases, Odyssey 1.0 and Odyssey 2.0. The first 4 years or so of the company, we were very much a social enterprise. So we were a for-profit company, but we were working in a new market, difficult geographies, and a very new concept. And so we were very, very fortunate to have support from foundations, and in particular in the early days, the Shell Foundation, to provide us the funding we needed to really kind of navigate the market, learn from stakeholders what needed to be built, and start to build out, all of the technology that eventually led to the big network on the Odyssey platform. And then in 2022, and we can talk about this more later on, but that was when we had built such a foundation for the technology and also for the network on the platform that we launched Odyssey 2.0, which was much more about building sort of the commercial high growth company on top of the social enterprise, and doing so by meeting the needs of all of the network participants that had come to our platform.
And I think that dynamic of having the social aspect, but also looking to also be a high growth startup as well, is something that a lot of people find a very hard time to reconcile, because a lot of times they see a lot of the work that is in the off-grid space, particularly, as only viable for impact funders or impact focused organizations. So selling that story early on to investors, because Odyssey was very early into the space, how has that changed over the years?
Well, I think the biggest thing that's changed is we've really expanded the types of assets that we work with. And so our portfolio now is a mix of commercial industrial systems that are typically more commercial because they have a commercial customer at the other end of it. We still do mini grids, which was sort of the bulk of our portfolio in the early days, which do require a decent amount of concessional funding to be commercially viable. And we've expanded geographies. So, we're now in, I would say, 30 plus countries in Africa, but also India, Latin America, including Brazil and Mexico. And so all of that has sort of given us a much broader mix of assets on our platform that have allowed us to kind of match the capital we have available, be it commercial versus concessional, with the needs of the different assets.
Yeah. And I guess we can jump into it now. I think one of the things that's always quite fascinating anytime I'm talking about Odyssey to a new person for the first time, it's always hard to put everything into kind of like a clear, succinct way because Odyssey does do quite a lot. So when you have to do the elevator pitch, how do you describe Odyssey in the current Odyssey 2.0 as you mentioned?
Yeah. Well, one thing that's interesting about Odyssey, and I always say this at the beginning of a description of the company, is that our mission hasn't changed since day one. Our mission is to accelerate capital deployment into the distributed energy sector to get more projects built faster. We started off doing this by providing an end-to-end technology platform for third-party financial institutions that were dispersing capital. And that led to building the largest network of solar EPCs, installers, developers, financiers, and equipment manufacturers on the platform. And then in the past year, we've incorporated a new piece of the platform, which is a procurement platform, whereby companies buying equipment, procuring equipment, can purchase the rest, receive embedded credit in that order, and cover the procurement, have the working capital to cover the procurement and construction phases of the project. So we've certainly evolved over time, and the way we monetize the platform has evolved over time as we focus more on leveraging our network for this new procurement platform. But the end-to-end technology platform that we've offered since day one is still a key part of our go-to-market strategy and a key part of how we've built our central position in the ecosystem.
On the credit side as well, I feel like that's something that largely emerged. You could correct me if I'm wrong, but was that always something that you saw as a direction that the product would turn into, or was it more of a needs based thing that came up? Because now Odyssey is in many cases a fund manager because you have raised money and you are looking to provide credit to projects. So is that something that has always been part of the long term vision, or has that been something that's just been an organic addressing the pain point of the people using the platform?
Yeah, great question. And maybe first, just to make sure it's clear to listeners, since I went through this quickly, but we offer an end-to-end technology platform for third-party financiers that are mostly doing post-construction financing of assets. So either doing consumer financing via asset loans or PPA financing, or doing results-based financing in the form of grants that come after a system has been deployed. And then more recently, Odyssey has been directly offering credit through our procurement platform for pre-construction, so for the procurement and construction phases of the project. And that very much came out of being in the market and observing the financing gaps that we still saw, even as we saw more and more post-construction financing coming online. So what we've observed over the years is the banking sector and the financial institutions have very much stepped up to meet the need of customers that want to buy solar. So if you are a shopping mall or you are a factory in South Africa, you have a decent number of options now to finance a system if you want to purchase a solar system to have reliable power at your site. But those customers, even if they have financing, don't want to pay for the majority of the system until it's been installed and they see it's working, right? De-risks the project a bit for them. And so then what we observed was there was still this financing gap in the market for the EPCs and installers that needed to go buy the equipment, install the system, and then get their payment. And we were seeing that significantly holding back scale in the market because EPCs were turning down projects because they didn't have the working capital to get it off the ground, or they're only able to do one project at a time from their pipeline versus tackling many at once. And so we realized that this was sort of the next journey for us, was to solve this working capital challenge for this critical segment of the market, because most of the distributed energy projects that are being built by small to medium size EPCs and installers that can't necessarily take out massive working capital credit facilities from a traditional bank. So observing this in the market and realizing the sort of competitive advantages we had to offer this product that led to A, the launch of the procurement platform, and B, the innovation to embed credit directly in orders placed with us to address this need that companies were facing.
And something that we've heard quite a lot on the podcast when we talk to operators, whether they are serving the customers directly or they're doing much larger projects, is how difficult it is and how long it can take to actually secure financing for projects. And that's something that's like a constant pain point. There've been several initiatives looking to address it, but it's been just consistent where there's a huge gap where you have one end of the spectrum, maybe like a handful of players, maybe like the top 10 or the top 5, maybe that have an easier time raising money, and then you have everybody else that's just stuck, like you said, probably just targeting a portfolio one project at a time. How loud was that feedback in the beginning when you introduced this product to the market? Was it like an immediate embrace for like, okay, this is just like the product market fit and this is something that you can really need to scale? Was the feedback that positive?
Honestly, it was like pouring gas on the fire. It was amazing. We have had such a positive response. We've had so many orders come in, far more than we can even service, which is a great problem to have. And what's been really exciting is that it's been across all of the geographies where we operate without major changes to the product that we're offering. The need is the same in Nigeria as it is in South Africa, as it is in India, as it is in Brazil, as it is in Mexico. So yeah, it's been a super exciting time to feel like we've really found product market fit, a product that's really needed by companies, and a product that can truly accelerate the impact that we have been having and obviously want to continue to have.
So I think something that'll be very useful for the sake of the audience is to just describe how is this different from a developer going to a bank to get a loan, the credit program that Odyssey is offering, because I think that that's kind of like what will highlight the key differentiator. So how's that different in terms of process and in terms of the final credit that they get and how they get it as well?
Yeah, I mean, I think that the main difference and what we're going for is that it's just faster and easier. The insight that we had is most of these projects don't require an on-balance sheet longer term loan. They just require essentially supplier credit, right? They need to buy the equipment. It's a pretty short installation period, install it, and then they have a payment coming in. And so if they can buy the equipment on credit until that payment comes in, that works for them. And so that's how we've structured the product. And doing it through a procurement platform versus sort of an official loan platform allows us to hold security over the equipment. So we own the equipment until it's fully paid off. So if something happens to the project and we could resell that equipment to the next project, which is a type of security that a traditional lender like a bank wouldn't be able to have. The other thing is, or I'd say the other difference is that these orders are off balance sheet, right? This isn't an on balance sheet loan. So it doesn't interfere with any other debt financing that the company might have taken out for their projects.
That's something that really surprised me when I first came into Odyssey was how integrated Odyssey was in the procurement process, not just having a relationship with OEMs, but being able to actually go out and handle the full supply chain negotiations and all of that. And I see that a lot of developers really see that as a huge value add, especially the ones that you say playing the more like small to medium scale developers, because with programs like specifically around DARES and a few other programs around the global south as well, a lot of those companies are looking to massively scale up their portfolio. So being that role of the partner, something that has grown very important. And I guess it kind of lends to Odyssey's obsession with what the customer wants and helping them scale. Has that been something that has been revealing to you, or is this just, a result of being consistent over the years?
Yeah, definitely. I mean, we've been focusing on the credit piece of the procurement marketplace, but that's just one value proposition that this marketplace has. We very much launched the marketplace to bring value to the procurement process for these companies, which are often, again, small to medium-sized companies, probably have just a couple-person procurement team. We want to be the extended procurement team. We want to unlock value for them simply by going through the Odyssey platform to buy their equipment. And we do that in a few ways. You mentioned OEM relationships. That's a big piece of it. As we become a bigger and bigger essential buyer for these OEMs, we continue to negotiate best pricing with them, better terms with them. And so over time, this will only continue. We'll deliver more and more cost savings to companies buying through us as we become one of the biggest buyers for these OEMs. The other piece is supply chain services. So we have an extremely experienced network of supply chain professionals within Odyssey that can help small companies navigate logistics and supply chain. And, we have a number of companies that come and order from us simply for the supply chain services, even apart from the credit product that we offer. And then the third piece is actually centralizing some of the upfront work that goes into procurement around supplier vetting and due diligence. So a number of these projects require that the EPC is buying from diligenced, vetted suppliers that meet ESG standards, but that's quite a burden for any small company to conform to. So Odyssey has sort of centralized, and we run a very detailed, comprehensive due diligence process on all of these suppliers to ensure that they meet ESG standards, and then can help smaller companies sort of have the confidence they need that their procurement processes and policies are complying with any requirements that their government funders or development finance institution funders might have.
You spoke earlier about good problems to have. And one thing that I find quite impressive is the product has been live for, I think, a year and a half or less. And it started off in the African market, Nigeria, South Africa, Kenya. But in that time, it's moved over to Latin America, so Brazil, Mexico, India, in such a short time as well. So you mentioned like really hitting that need. Did that growth surprise you initially? I think we should start there.
I was optimistic for the product. I think we spent a long time in the market figuring out what companies needed. So I wouldn't say I was surprised, but I was pleased to see growth. We just finished Q1 at 25x growth over the past 12 months, which was really exciting to see. Yeah. And I think I mentioned this earlier, but the most fun part has been seeing the universal applicability of the product, so that the same product works in India as it does in Brazil, as it does in Mexico, and obviously in Nigeria, where we started.
So with those unique opportunities for growth and the exciting times that Odyssey is having, I imagine those bring in some particular challenges. You said that you're having way more demand than you can meet. Has it been relatively easy going out with the track record that Odyssey has so far to go out and raise more money? And what are the other challenges that has come up with the product that you're looking to turn into opportunities maybe?
Yeah, I'd say as we scale volumes, there's sort of two things that we're tackling. So the first is, as you mentioned, raising debt capital to support our own working capital so that we can then offer extended payment terms in our procurement marketplace. That's been going well. We've been getting a really positive response from lenders. We have a great track record. We have strong portfolio quality metrics, but it's just a slow process raising debt, and we have a lot of demand. And so our pace of capital supply is much slower than our pace of capital demand, let's say, for orders in the marketplace. So that's something that we're continually working on. And then the other piece is just how quickly we can process orders. So it's, we're a technology company. We have a great tech platform, and our next phase of technology development is all around utilizing AI to take some of the manual work of evaluating each order and fulfilling each order out of the process so that we can process greater volumes of orders in the same amount of time with the same amount of resources. And there's so much to do on that front, and so much opportunity that we're just scratching the surface now. And I'm really excited for that to be the next frontier for our whole tech team.
Just to do a bit of a brag for the audience, even though Emily says they're still looking to improve on the speed of delivery for credit processing, I think Odyssey is really one of the fastest to actually get projects approved and get procurement started. I think it's always pleasant anytime we speak to developers and we tell them how long it takes, and they're like pleasantly shocked. And that's something that is still like rolling into the product more generally. But with all this excitement right now, and with the current phase of the market, if there are developers listening to this, what are the key things about the product that you'd want them to keep in mind and remember if they want to reach out and also take advantage of supply chain credit?
Yeah, great question. I mean, there's two things really that needs to be true about a project for us to be able to support it. The first is that you've got some sort of clear takeout payment once you've installed the system. So it could be one of the results-based financing facilities we're running on the platform, like DARES, Dasim, Ascent, or one that we're not running on the platform. Or it's a customer payment, right? You might have a great contract signed with a commercial industrial customer, but they want to make, they only want to do let's say 20% down payment and pay 80% upon delivery of the system. We're here to support you to get that project off the ground. So clear takeout financing. And then the other thing is that we are mostly underwriting your ability to deliver the project. So you need to have track record of having done, projects before, and we need to make sure that you have the capital in place to cover the rest of the capex of the project that we're not financing, so that the second that we press go, and as Olu said, we press go very fast, you're ready to go install the system and get the project moving. So really just those two things. And then, our team would be incredibly excited to talk to you about placing an order with our procurement team.
Very well said. So to go back to the organizational level now, you've mentioned a lot about the role of partnerships specifically, and Odyssey does have a lot of the partnerships in the DRE space, and you're growing partnerships in the new markets that you're entering. How have those partnerships really evolved over the last few years, particularly in the context of these new products? The space, the best part about this space, I think it's very collaborative, but also that can actually, like, you run into the same players over and over again. Has that been generally positive? And how do partnerships play in Odyssey Land for Growth?
Partnerships are huge in a couple different ways. So whenever a client or a customer places an order in with us, we instantly think of that organization as a partner of ours, because our goal is that they're continuing to reorder, right? They place an order with us, they max out the credit we can offer them, they repay that, and then they move on to the next project. And so this is a long-term trust building relationship. And these clients very much become not just one-off buyers from us, but real partners for the long haul. We also have partners with distributors. So that's another place that we've sort of come far in each of our geographies. Distributors often can't provide the payment terms to their buyers that the buyers need. And Odyssey can partner with that distributor to be to essentially offer the supplier credit that the distributor can offer itself. So that's another key partnership. And then the third partnership that's really crucial for us is banks and financial institutions that provide post-construction long-term financing. So we have some fantastic partnerships with banks that are here to finance solar, especially finance the customer buying the solar. And we are their partner who pre-finances the system up until their financing kicks in. So then we can offer customers, we can offer EPCs an end-to-end solution, right? The procurement and construction financing from Odyssey coupled with the long-term post-construction financing from the bank. We have a number of partnerships on that front, but one of our favorites is with Nedbank in South Africa. They've been an incredible partner for us, and they use the Odyssey technology platform for the beginning to end of their financing process. And then Odyssey handles the procurement phase and the working capital for that before their financing kicks in.
It's really important to understand that Odyssey is still a startup, and it's still less than 8 years old, I think, right now. So in all the years you've had operating Odyssey, obviously with the fantastic people that work there and all the partners that you work with, when you speak to potential customers or maybe investors, current or potential, are there any particular stories that you like to go back to and just, to point out that, like, okay, here's the impact Odyssey is having, or just something you just like to bring up at a dinner, or maybe just a conversation that really makes you proud of the work that Odyssey has done?
That's a great question. A lot of Odyssey is sort of, I alluded to this earlier, but what's unique about our company is that we spent so many years before we were Odyssey 2.0 building the ecosystem and network of companies that are on our platform today. And that includes hosting financing facilities worth $2.8 billion on the platform. So that's one of the numbers that I like to point to, because it means that we are truly playing a role in catalyzing real dollars supporting distributed energy projects, which, as I said in the beginning, has been our mission since day one.
Yeah, and that is fantastic. So as we head towards the end of this interview now, something that we asked you in advance and we had you prepared for is, with all the work that you're doing with the ambitions, goals, and the massive growth that Odyssey is seeing, we are working in a very impact-driven space. The off-grid energy and solar and renewable energy in general is still very impact-driven, even though a lot of commercial interests are coming in now. With all the work Odyssey is doing, how do you define failure?
Yeah, it's a tough question, but for any startup and any company, success is certainly not guaranteed. And there's a lot of external factors that can prevent a company from hitting the level of scale that it hopes to achieve. Market dynamics, macroeconomic changes, policy changes, et cetera. The only thing that I would consider a failure if something impedes sort of Odyssey's scale and success would be if it was within our control. If there was something our team could have done, if we didn't realize our own potential, then I might consider, then I might define that as a failure. But if we've kind of run at this problem as hard as we possibly could, and we look back and felt like there was nothing more we could have done, we hired the best talent, we executed as well as we could have, we set the vision, et cetera, then no matter what the outcome of the company is long-term, that's still a success.
Thank you for listening to the podcast. If you did enjoy the episode, please be sure to share with a friend or colleague. Also check to make sure you're subscribed wherever you're listening, and we'll see you again on the next episode of the Energy Talk podcast. Have a lovely day. Bye-bye.